late the last few weeks here, just because we've been going over quite a bit of stuff. So what we're going to cover tonight, like I said, is how to trade spreads directionally. We're going to do a quick overview here of the spread basics. We're not going to spend too long on it, but we're going to kind of jump through it and kind of breeze through it real quick, just as a quick reminder, because you want to make sure you have those basics down to really understand the power of spreads. So for some of you, that's going to be just, review. You're very familiar with spreads. Some of you guys may be familiar with binaries, but not real familiar with spreads just yet. So we're going to walk through the basics of spreads, and then I'm going to show you a little bit about, one of the biggest questions on spreads is, which one do I choose? Just like with binaries, there's so many. Which one do I choose with spreads? And it all kind of depends on your strategy and your system. It also depends a lot on the expected movement of the market. Are you expecting big moves? Are you expecting small moves? Are you wanting to mirror the market kind of tick for tick like you would be doing if you were trading spot FX or futures contract? So we're going to talk a little bit about that, and then talk about how to use one of our tools, which is called the Apex Scanner. The Apex Spread Scanner quickly shows you all the different spreads available, and it will quickly show you how close they are to the market. What is the proximity? What's the premium? So we're going to cover some of that, and then I'm going to show you, just kind of run through a couple different ways that we here at Apex trade Nadex spreads directionally. I'll show you real quick kind of 2 or 3 of our systems there. Then as always, yes, this webinar is being recorded, and you will be able to get a copy. I'll show you here in just a second where you can find this recording after the webinar. I'm also, as always, going to show you on our website where you can get more in-depth information. Normally, whatever I cover, we've got limited time, and we're trying to cover a lot of information here, or kind of cover 3 or 4 pieces and then put all those pieces together for you. But some of you, want more information on a certain section that we're covering. And I'm going to show you on our site specifically where to get that. Very recently, Daryl did a webinar, a Thursday webinar. It was titled The Ins and Outs of Nadex Spreads. And it's not one huge long webinar, 3 hours long. We actually broke it down into sections, how to use a scanner, what's the basics of a spread, what is proximity, what is premium, how to choose them. There's 4 or 5 different videos in there, I believe. And that way you can kind of go back or go to specifically what main area you have a question about, or go back to that particular area. Not all just, a long one single webinar. I'm going to show you, for those of you that want to get some more in-depth training on certain things we're going to cover, or to better understand the basics of spreads for those of you that are new. If any of this is kind of over your head, or you didn't quite follow it, no worries. Like I said, this webinar will be recorded, and I'm going to show you where you can go and get information starting from scratch on what is a spread, how does it work, ways to trade it, and so on. Okay, so if you have a question as we go through here, feel free to ask it. I'll try to cover it. If we're going to cover it in a future section, I'll hold on to it, and then we'll get to it then. If there's any questions I don't get to, we'll stay late at the end and try to get them all covered. Brandon was asking, hey, this is my first time. Is there a way I can see everyone's question? There's not a way for us to do that, but I go through and read off every question that doesn't get answered, and I explain it, and so you'll definitely get the full advantage of everybody's questions here if they're not covered for us. So let's hop in and get rolling here. So welcome to the Nadex Application and Strategy webinar series. My name is John Skelton. I'm with apexinvesting.com. If you're wondering, Apex is a separate company from Nadex. Nadex is a separate company from Apex. We're not owned by each other in any way. We here at Apex, we're a community of traders helping traders. We're an education company. Nadex is the platform. Okay, so I'm going to show you some quick information on the Nadex platform to make sure you're familiar with that. and then show you how you can hop over to our site and get tons and tons of free education, free webinars, free training about Nadex binaries, Nadex spreads, and several other trading instruments. But real quick, let's knock out our disclosures. As always, trading futures, options, or any financial instrument involves risk, may not be suitable for every investor. Please consider these factors before making any investment decision. All information contained here in this webinar is express property of Apex Investing, may not be shared or distributed to another party without written permission. And again, futures and options and swaps involve risk. Any trading decision you make is your sole responsibility, and any info here in this webinar is just for informational and educational purposes only, and it's not a solicitation of an offer to buy or sell any particular financial instrument offered by Nadex. Past performance is not indicative of future results. So, speaking of Nadex, for those of you that are new, hop on over to Nadex.com and you can go through all the different tabs here, get information on the different products that Nadex offers. The main one I want to direct you to right now, some of you have a live account, some of you have a demo account. Go right here to the trading tab, third one down, demo trading platform. If you do not already have a demo account with Nadex, go ahead and hop on right now and do this. Even while we're on the webinar, it might help you kind of follow along a little bit here. It's real easy. You don't have to give out a whole lot of information. Choose a username, first and last name, phone number, and email address, and that's it, okay? They'll shoot you an email that will give you a temporary password, and once you have that temporary password, you'll be able to use your username and temporary password to log into the demo Nadex platform. When you open a brand new demo account, they'll give you a demo account with $25,000 of demo kind of play money in there. Just helps you get used to the platform, used to entering and exiting orders. You know, how does a buy order work? How does a sell order work? And, you know, with no worries. You're not in there with your live money trying to figure out what to do, how it all works. You can get in there and play with it, see what the different markets are that they have available. You know, if you're testing out any new strategies or systems, do it in your demo account. Nadex will give you a 2-week free demo account. Once you open a live account with Nadex, all it takes to open a live account with Nadex is a minimum of $100 deposit. I mean, you can put $10,000 in there, you can put $100 in there. All you got to do to open it is $100. And once you place your first live trade in your live account, doesn't matter if that's a $70 risk trade or a $4 risk trade. Once you place your first live trade, you can contact Nadex and ask them to extend your demo account, and they will extend that for you for 1 year, okay? That way you always have your demo account there. You know, anytime you're testing out something new or new strategies or systems, there's, you know, if you've been on these webinars with us, you've seen multiple different systems and strategies we teach. And, you know, don't overwhelm yourself. Don't think you have to go in and learn every single thing there is to learn, every single binary or spread strategy that there is. Look into them, see which one best suits you, your personal style, your personal trading style, your personal schedule, your account balance, your risk tolerance. See what the best one is for you to start off with and focus on that one, all right? Don't try to dig in and learn everything before you do anything. Pick one, start there, learn everything you can about it, watch our videos, watch our training, watch them again, start practicing in demo, ask questions, get it down in demo, be profitable in demo, see your demo account growing. Then when you're comfortable, hop on over into live. You know, when you make that transition from demo trading to live trading, there can be some psychological differences there of, you know, hey, now it's real money and, ooh, am I going to take this trade? You've got to make sure that you trade, when you switch over to live, you trade the same way that you've been trading in demo that's been working for you. So once you master it in demo, hop over to live, master it in live, be successful and profitable in live. Then if you're like, okay, I've got this, I want to add on another layer. I want to add on another play to my playbook, you know, then choose another strategy or system, practice it in demo while you're still doing your other one live. Once you get that down, add it in. Add in a layer at a time. Don't try to learn every single one out there at once. Don't try to be going back and forth between 5 different systems at once. You're going to overwhelm yourself. You're going to be jumping back and forth between charts and systems and missing trades. Start with one and layer it on, okay? Next thing you want to do, hop on over to apexinvesting.com. You can, there'll be a tab there that says join free now. Again, all you got to do is just create a free username and password, and that will give you access, totally free access to our website here. Once again, a lot of information on our site. Don't get overwhelmed by all of it. You guys are on this webinar because you're interested in trading Nadex. So I'm going to direct you kind of where to go. A couple places on our website, basically 4 main places you want to pay attention to here. Our weekly webinar schedule is here. You can go there and get a list of all the upcoming webinars we're doing. We not only do these on Monday night with Nadex, but we do a couple webinars throughout the week sometimes as well, radio shows, and so on that are very helpful for you there. Binary Essentials, okay? This gives you a lot of information about trading Nadex binaries. If you go down to this 3rd step here, Trading System Courses, step-by-step courses on trading binaries, 5-minute binaries, 20-minute binaries, all kind of information in there for you about Nadex binaries. And right here, the questions tab. This one's very important for you. Second one down is Trading Questions Forum. A couple of you have already asked, is this webinar going to be recorded? Yes, it is. And I will have it updated or uploaded most likely later this evening, worst case tomorrow morning. And where do you get it? Well, you go right there to the Trading Questions Forum. Give it just a second to load. Once this loads here, you'll see we have it broken down into several sections. There's sections about trade management, psychology, risk management, strategies, systems. You can go through and read information on all our strategies, all our systems, step by step. But if you go all the way to the bottom here, it will say watch webinars here, okay? And right there, watch webinars here, newest webinars, all right? That's where the webinar tonight will be uploaded. That's also where you can see some of the past several weeks webinars as well, if you want to play catch up. It's also broken down into kind of a library collection here. Nadex binary webinars, Nadex spread webinars, Nadex platform tutorials, how to use the platform, how to enter orders, anything you need to know about the platform, getting started with Nadex, everything you can want to know there, literally hundreds of hours of free education, free webinars, free step-by-step training courses that you can take advantage of. So you've got all this free education here. You've got a free demo account through Nadex. Hop in, take advantage of it, start learning right away, okay? Right here, Nadex Spread Webinars. If you click that, okay, and you can also go up here and use the search if you want. Remember I told you earlier the ins and outs of Nadex spreads, okay? That is where you want to go. We're going to breeze through quite a bit of information tonight, and you can go back and rewatch this webinar. But if you also want to watch a webinar of literally step-by-step, Daryl in here shows you some live trades that he did on his radio show with some spreads and how they worked out. You're kind of monitoring live with him. He'll pause the video and kind of catch up on it later. Spread basics, exactly how spreads work step by step. How to understand risk reward with spreads. What does proximity mean? You know, there's so many different spreads. Which one do I choose? Why are some of them priced different? So what is proximity? What is premium? After you watch this, I mean, there's a ton of information on our website about spreads, but start here. If you go through this right here, you will understand spreads, okay? And you will understand how to use our scanner to even make that easier. And yes, Ken, exactly, because the scanner will allow you to show you exactly the correct spreads that are closest to the market, which ones you want to choose for your strategy or system. Might be different ones, and we're going to cover some of that tonight. But that's the first place you want to go, is most recent webinars to watch this one that we're doing tonight, and then go to spread webinars, and watch the ins and outs of Nadex spreads. And you can see there's a bunch of them in here under spread webinars. Nadex spreads made easy, how to trade spreads in different widths and strikes, how are they determined. I mean, there's a whole bunch of information in this forum, but that is where you want to start right there, is the ins and outs of Nadex spreads, okay? Now, Ken was asking a question about the scanner. The scanner is part of that webinar series right there, ins and outs of Nadex spreads. But in the forum, you can go to the scanner section, and there is a brand new video there of how to use the scanners. Now, we are currently we have a binary and spread scanner now already available for free to the public right here under scanners, and I'll show you that here in a minute. But we are in the process of releasing a brand new scanner. It should be released here in just the next couple weeks. That is absolutely amazing. I'm going to show you a kind of preview of it here in a minute. It makes spreads so much easier. It just lays it all out there for you. You don't have to sit there and look through the Nadex platform and all the different spreads and trying to calculate what is my risk and what is this. It lays it all out there for you and just tells you right in front of you. Okay, so tonight, directional trading with Nadex spreads, how to pick the right one, what are some directional strategies, and how to limit your risk and increase leverage. So in the previous webinars, we've talked about some of these things, about some of the misconceptions of spreads with the premium and proximity and which ones do I choose. And that is the webinar to watch to figure that out, the ins and outs of Nadex spreads. So let's do a quick spread basic overview here, okay? One of the nice things about trading Nadex products over trading, say, spot Forex or futures or other instruments is all products on the Nadex exchange are capped risk, okay? You can't lose more than you put up in margin. Your risk is your margin, but you still get extremely good leverage, okay? Just because your risk is protected doesn't mean you lose your leverage. And with the Nadex exchange, you can trade spreads on stock indices, future commodities, and Forex pairs, okay? The price is driven by the underlying market. It's not driven by supply and demand of the spread, as the market maker is making the market based on where the underlying is. And what does that mean? I'm going to explain that here for you. It moves in pips, whether you want to call it a pip or a tick. It's the last digit quoted on the exchange, on the Nadex exchange. Every digit is worth $1 per spread, whether it's you bought or sold the spread. So some of you are brand new. You know binaries. You know how binaries work, and their expiration, they're at 0 or 100. Okay. If you're brand new to spreads, kind of in a sense forget everything you know about binaries. All right. Nadex, when you think about Nadex, you automatically think binaries, but they actually offer two products, binaries and spreads. So kind of wipe the slate clean here and just kind of take a fresh mind to look at this. What is a spread? Some of you are like, oh, spreads are so confusing. I don't really understand them. Spreads are harder to learn. They're harder to understand. But once you do learn and understand them and the light bulb goes off, they are so much easier to trade than binaries. They're super, super easy to trade. You just have to kind of clear your mind and start fresh. Nadex calls them bull spreads. We like to call them box spreads, okay? Just imagine a box, imagine a house. Spreads have a floor and a ceiling, okay? And I'm going to give you a little better example of this. So that is the first thing you always have to realize. Spreads have a floor and a ceiling. Let's just say this, for example, here was a spread on the euro-dollar market. The floor, the bottom of the spread, was 1.2400. That's the bottom, the floor. The ceiling, 1.2500. Okay? So the spread, what is a spread? The spread is the difference between the floor and the ceiling. So this particular spread is 100 pips or 100 ticks wide. All right, that makes sense to everyone? The floor is 2,400, the top is 2,500. So it's 100 ticks or pips. All right, so 100 pip spread. So Again, it moves in pips or ticks. It's the last digit quoted. So each pip is worth $1, and these are 100 pips. So the spread value is 100 pips, each pip being worth $1. So the overall spread is worth $100. Okay? But it all depends on where you enter the spread. Now, the nice thing about the spreads is this. You cannot lose. Let's say you were selling the spread. All right? So let's say that you sold the spread right here. Okay? Well, if you're selling it, you're saying the spread's going to go down. So if you sold it right here, if you got 2,400 down here and 2,500 up here, you're selling it somewhere right here about 2,450, right in the middle, right? Saying it's going down. Well, but it didn't. It went up. Okay? And see here, a couple times it went up outside of the ceiling. Okay? You can't lose any more money outside of the ceiling. So you sold it saying it's going down, but it went up. You can only, so you were wrong in your direction. So you can only lose money up to the ceiling. This thing can keep flying up, but you're not losing $1 per tick past the ceiling. And you can't lose or make money below the floor either. So that's why it's capped risk. You know going in what is your max reward and your max risk. Okay? So let's say for this example, we were going to sell at $24.90. All right, it's up here pretty close to the ceiling. We're going to sell at $24.90. If we're selling, we're saying the market's going down. So if we sell at $24.90, we can only make money down to the floor of $2,400. So the ceiling is $2,500. We're selling at $24.90. So if we're selling, we're saying it's going down. If we're wrong and it goes up, what's the most we can lose? Where can it go up to, and then that's our max loss. Let me just get a little interaction here and make sure everybody's following. So the ceiling's 2,500. We sold at 2,490. If we're wrong, the most we can lose is 10 pips. Right, 10 bucks, exactly, okay? Because we don't lose past that. If we're right and the market goes our direction and goes down, what's the most that we can make? Look at this, right here, the market went down to 2,400, but it kept going. So we were right, it kept going. But we can only make money down to the floor. So yes, 90 bucks, okay? So that's the first biggest concept you've got to get about spreads. You got a ceiling, you got a floor, you can buy or sell anywhere in between depending on where the market is and what spreads are offered, but you can't make or lose more than your floor or ceiling, okay? So if we're buying the spread, it's the exact opposite. We can't make additional money above the ceiling. We can't lose additional below the floor. So if we bought it at 24.10, our risk is what? 10 pips, 10 ticks, 10 bucks, right? Because it can only go, if we're buying, we're saying it's going to go up. So we bought right here, and what did it do? First of all, it went down against us. It went down to the floor. The most we can lose is 10. It kept going, but we didn't keep losing past that floor, did we? And then what happens? It comes back up, and look what it does. It goes way up there. Now, another thing, with spreads, they do have expiration times, okay? So at expiration, your spread will, wherever the market expired, the difference with where you bought it at and where the market expired will be your profit. Or you can exit early, okay? For example, if I bought here at 24.10 and the market went up here to 2,500, would I want to leave that trade, and say we have another hour to expiration, would I want to leave that trade open, or would I probably want to close it? Why would you ever leave a trade open? Well, in hopes of making more money, right? But once you've reached the ceiling, you're not going to make any more money. You've maxed out your profit, right? So you want to close it because you're not going to make any more by keeping it open. But what could happen? Oh, it could come all the way back down, right? And then you're regretting it. Now, in this particular situation, it went back up, and then at expiration, expired right here. So, okay, right here, when we bought it, and then it went down against us. If it hits the floor and goes below the floor, what happens? Is our trade closed out? Do we get stopped out? No. Okay. On a spread, the trade only gets stopped out, or closed out, I should say, when you exit it and close it, or when it expires. So that is the beauty of spreads compared to other instruments that you may have a stop loss on, okay? Because you bought it here, expecting to go up. No, it came down, went below your floor, but your order is still open. Your trade is still open. That does not cancel out your trade. And you're glad it didn't, right? Because why? What happens? Boom, pops all the way back up, okay? You can, yeah, JP, can you close automatically at the ceiling, or you have to monitor it at all times? You can monitor it, or you can set a take profit order. And I'll show you how to do that here in a little bit. If I buy it right here for 24.10, I can put in an order saying sell it if it gets to 2,500. Okay, and that order is in there as a working order. And if it hits that price, it will execute. Okay, but you still want to keep an eye on it too, because what happens if it comes all the way up here to 24.99 and then shoots back down? You had your order, you had your take profit order in, but it just barely missed it. You might still want to be keeping an eye on the market, like, okay, market's going up, 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 up. Oh man, it's starting to lose some steam. Let me just close it now for the profit I have. Okay, so but if it doesn't make it, you could get stopped out. Yep, exactly, Rob. Okay, so everybody following so far on that simple, basic overview of what a spread is. You got a floor and ceiling, can't make or lose more above floor or ceiling. Okay, so any questions? We're going to keep moving here, but any questions on that very basic concept of what a spread is? We'll get into more to the different ones and and so on. So we understand that in this particular example here, if we bought at 24.10, the most we can lose is 10 ticks to the floor. The most we can make is 90 ticks to the ceiling, but we can close it at any time, right? So if I bought it at 24.10 and the market's going up, 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 and it's up here at 24.60, well, I'm up $50 in profit, right? I could just close the trade right then, okay? I don't have to wait for a floor or a ceiling. I can close it earlier to lock in profit. Or, if I bought way up here and it's going down against me, I can close it earlier to protect a bigger loss. Does that make sense? So the floor and ceiling are there as your max areas, but you can close early anytime to either protect profit or to shorten a loss. Okay. So again, like I said, close early. You can close anytime you want. We bought at a certain time, we can close when it's here, there, wherever we want. Okay. Brandon, is there ever a time in which you can make more than $1 per tick? No. The only way to do that is to have more than one spread. As far as one spread contract itself, it would never be more than $1 a tick. Okay, but you can do 10 spreads and have $10 a tick. Okay, or you can do 5 spreads or 20 spreads, whatever you want to do there. Okay, but one individual spread contract will never give you more than $1 per tick. Okay. JP, so you always want to enter the trade close to the boundaries. Not necessarily. And we're going to actually get into that here in about 2 more sections, JP, because that right there is a great question, because that right there is the biggest misconception about spreads. And those examples I'm showing you, those are close, okay? And there are times when you, depending on your strategy, that yes, you want those type of spreads. because they do offer the lowest amount of risk, right? I mean, that's a pretty low risk, 10 bucks to make 90 bucks. We all love that, right? But there are some other spreads that will technically show you that it's a higher risk, but it's not necessarily a higher real risk, but they actually move quicker. And I'll show you what I mean by that, okay? Will these be less risk at expiration than binaries? Well, that's a good question. And we're actually going to talk about that here in just a minute, Rob. Personally, you know, and Daryl and I have both said this several times, if you're a new trader, if you're new to Nadex, or if you're new to trading, or if you have a smaller account, you should be trading spreads. Binaries are the buzz. Everybody loves binaries. That's the hot topic right now. We talk about them all the time. We trade them all the time. We trade them every day and trade them all day in our rooms. I'm not bashing binaries by any means. But if you're new to trading, smaller account, spreads are the way to go, because spreads are easier to trade once you understand them, and they can have less risk. Because what happens if you buy a binary and it expires 1/10 of a tick in the wrong, or let's just say 1 tick. You buy a binary saying it's going to be over, you know, this amount, and you're wrong by 1 tick. Let's say you bought that binary for $70. If it expires in the money and you're right, it's worth what? 100 bucks, right? So you're risking 70 to make 30. But what happens if you're wrong by 1 little tick on that $70 investment on a binary? 1 tick, you lost 70 bucks, right? What happens on a spread if you're wrong by 1 tick at expiration? What'd you lose? $1, right? Okay. Now, can you take the other side of that argument and say, yeah, but what if the market only went up by 1 tick, so I only made $1 on my spread, but I could have made 30 on the binary? Yeah, you could have, but you could have lost 70 by 1 tick, right? So 2 ways of looking at it there, okay? Especially if you have a smaller account, trading spreads is a lot less easier on your heart rate, okay? So, so JP, generally, which one makes more money, spreads or binaries? You know, that's hard to say, because it's a valid question, and please don't take my answer as me trying to scout that question or not answer it. But there's no real answer to it, and here's why. It's because it all does depend on your system or strategy. For example, JP, well, an example I just gave, if the market only moved a tick or two, your binary might have expired in the money, and if you bought it for 70, you might have made 30 bucks. And on the spread, a couple ticks, you might have only made a couple bucks, right? So you're like, man, I like binaries better. But as soon as that 1 tick goes against you, and you only lost $1 on a spread, and you lost 70 on a binary, you're really liking spreads, right? Now, what about this? Let's go back. Let's look at this example. Remember this example here? Say we bought this spread at 24.10, okay? Well, let's say that the market's flying, like right here, boom. Well, let's say you bought a binary that had a strike of 24.20. Market moves up, boom. All right, so you bought a $70 binary. The market's moving up, so that binary already jumps up to like 100 bucks, even before expiration, right? Jumps up to like 95 bucks, and you get out of it. Cool. I just made 30 bucks, right? Because what's the most a binary can be worth at expiration? 100 bucks. It can't go past 100 bucks, no matter what the market's doing, right? So you buy it for 70 bucks, market's going up, you were right, you're happy, you're winning, You made 30 bucks. But what did the market do? Kept going and going and going and going and going. On the spread, how much did we risk when we bought it for 24.10? We risked 10 bucks. What do we make on it? 90. So if the market's flying, if the market's moving, you might have a potential to make a lot more on a spread because it's following the market $1 per tick, tick for tick, all the way up to the ceiling, right? The binary, as soon as it reaches max profit, it's done. The market can keep going in your way and you're not making any more money off of it. You know what I mean? So now, if it's a slower moving market and it's, not moving as much, you might prefer a binary, but there's still ways to make money on spreads there. So that's why I'm saying there's not an easy answer to that of what makes more money, binaries or spreads, because it all depends on the market. It all depends on the market condition of that day and what strategy or system you're doing. How many binaries did you have compared to spreads? The other way to look at it is this. What if the market only moved, okay, now this may be a little complex here. What if the market only moved 10 ticks? Right here. Let's say we bought it for $24.10 and we'd bought a $70 binary. We're comparing them side by side, right? Market moved up 10 ticks. My binary expired in the money. So I had $70 on a binary. Now it's worth 100. I made 30 bucks, right? Cool. What did I make on my spread when it moved up 10 ticks? 10 bucks. But what was my risk on my spread? 10 bucks. So I made a 1-to-1 risk-reward ratio on my spread. I risked 10 and I made 10. Made 100% there, right? On my binary, I risked 70 to only make 30. That's a pretty big difference, right? But what if we equaled them out? What if I bought 7 spreads? I'm also risking 70 bucks, just like I'm risking on my binary. But with only 10 small ticks, I now made 70 bucks on my spreads and still only 30 on my binary. Does that make a little sense there? You can't get so focused on, oh man, the market only moved 10 bucks. I only made $10 on that spread. Ugh, I don't want to do that. I could have made 30 or 40 on my binary. Yeah, but what'd you risk? You risked 60 or 70 to make that 30 or 40. What happens if you risk the same 60 or 70 in this example? You could have made a lot more on the spread, right? You could have risked the same 70 bucks, the market only moved 10 ticks, and you made 70, a lot more than your binary. And you're real happy when it doesn't just go up 10 ticks, it goes all the way up to the ceiling of 90 ticks, and you had 10 spreads, or 7 spreads, right? Then you're real happy. Okay, all the comments are coming through now. Mike, oh, you're opening up my mind. I'm glad I joined this. Remy, I think I like spreads. You're my new hero, Mike. Okay, so when I started with binaries. I didn't understand spreads. I thought you couldn't make money with spreads. I thought it was too hard to make money with spreads. I thought the market has to move like crazy. It doesn't once you understand them. Now, real quick, let's make a clarification here, okay? JP, this will answer your question here too. Nadex is the platform. Nadex is not trading against you. The question is, how does Nadex make money on spreads? Nadex makes money on spreads the same exact way that they make money on binaries. They charge you 90 cents, exactly, Phyllis, 90 cents to enter the trade, 90 cents to exit the trade, okay? They only make money on the fees. The market makers, Nadex is not trading against you. When you buy a spread and you make money, Nadex is not losing money. Okay, Nadex is not trading against you. All right, the market makers are the ones creating this market. What do I mean by market makers? Let's pull over the Nadex platform real quick here. When you're looking, let's just go right now to Forex spreads. Let's go to Euro dollar. Let's see what spreads we have going from 6 p.m. until 11 p.m. Eastern tonight. Okay. All right, these three spreads here, for example. Oh, come on. All right, and it's the same with binaries. When you're ever trying to do binaries, what do you have? You have a bid and an offer, right? You have a bid side right here if you want to buy. Here you want to sell, correct? And there's always a difference in price, right? That's called bid offer spread. That's the difference. All a market maker is doing is making a market. They are creating contracts of they'll let you buy this one for this, they'll let you sell this one for this. So all they're trying to make is that difference. So Nadex makes money off the fees. The market makers are making the difference of the bid and ask. They're gonna sell to you for this price and let someone else buy for this price. Or they're gonna buy for this price and sell for this. That makes sense? That's how money is made on spreads. Because you may be going one direction, someone else is going the other direction, okay? What are the market makers? Us? Market makers can be other traders, but market makers are actually, what's the best way to explain market? People that are going in and literally making a market, meaning they are people with very large accounts that are making this market. They're known as a market maker. It's a different contract with Nadex, different, commitment with Nadex of they are providing liquidity. They're making sure there are offers out there and bids out there, that there's always something to buy or sell close to the market there. And what they're making is the difference. Just like if I'm a car dealer, I want to buy, you want to sell me your car, I want to buy it for $1,000, I want to sell it to someone else for $1,200. I'm not the buyer of the car, I'm not the seller of the car. Yes, JP, exactly. I'm just making the difference, right? Basically, Nadex is, think about it this way. Nadex is the grocery store, okay? And Kraft Foods is bringing in food to the store to sell, and the grocery store is letting you come in and buy it. They're just facilitating the buyers and the sellers, all right? And they're just making money off their fees, okay? So, real quick little market maker lesson there, but let's go back here because I think this is starting to kind of piece together for everybody, right? Some of you are going, oh, glad I was on here. I love spreads. That is the difference. Is there times where you could have made more on binaries? Possibly, because there's a smaller move in the market. And you're like, oh, the market only moved a few points. But, I could have made a lot more on spreads. Yeah, but you could also possibly gotten more spreads, right? So you got to look at both sides of that. So let's move forward here. Different expiration times. There's always different spreads to choose from. All right, you've got intraday spreads that are as little as 2 hours. Got daily spreads that go up to 22 hours and 15 minutes. What do I mean by that? Let's look here on the platform again. For example, just the euro dollar right now. We've got spreads that go from 6 p.m. to 11 p.m. Eastern time. All right, and you've got 3 different spreads. Okay, see this spread? It's a floor of 1060. This one has a floor of 935. This one has a floor of 810. And they all have different ceilings. Okay, you've got what's called a middle spread, an upper spread, a lower spread. Okay, sometimes your upper and lower spreads are going to be more like the examples we looked at a minute ago, where you can buy or sell closer to the floor or ceiling. The spread right in the middle is going to be normally you're getting in kind of right in the middle of the floor and ceiling, not towards the floor or ceiling, okay? And then we've got 3 more spreads here that go from 6 p.m. to 8 p.m. 7 p.m. to 9 p.m. Why would there be different spreads right there? Well, they all have different expiration times. They all have different floors and ceilings. And you can buy them for different amounts, and we're going to get to that in a minute. It all depends, again, on your strategy or system. What strategy or system are you using? What is your chart telling you? Is there news coming out that could move the market? Meaning, is your strategy or system telling you the market's going to go up, but it's a longer term strategy where the market's going to go up, but it might be like up, down, up, down, up, down, but slowly working its way up. And so by hours and hours away, you're expecting to be 50 points higher than where it is now. But you don't know if it's going to be much higher within the next 30 or 40 minutes, you know? So you might want a longer term spread to expire a little further out. What if you're going to be trading around a news event announcement that's coming out here in just a little bit and you want a shorter term spread? What if you're a part-time trader? You can't sit and monitor your trade for hours all day. You can only trade for a few hours at night. You might want a shorter term spread, okay? So there's all kind of different spreads there. You can even see the daily one goes out till 3 o'clock tomorrow afternoon, all right? So you've got shorter term and longer term spreads, okay? Let's see here. What are those? Let me just check on some questions here. I think some of these we're going to get covered here. Mike, are spreads good to use at news release, hoping for a big move one way or the other? Yes, they are. I'll point you to a couple of places here in a minute. There's a couple different ways to use them for news trades. Sometimes you can use them directionally, but problem is you don't always know ahead of time how that news is going to affect the market. Is it going to be good news or bad news? Is it inflation, deflation, interest rates higher or lower, inventories, you know what I mean? But we do have a strategy that we call the iron condor, which is actually buying a spread and selling a spread. Buying and selling two different spreads, hoping for it to expire in the middle and be able to make money on both sides. And I'll show you where you can get some more information on that. Okay. Let's see here. Charts, we use Nadex charts. All right, we're going to talk about some charts here too in just a minute, Ken. And I got a couple other questions we'll get to here too. Okay, real quick. All those different spreads I showed you, remember? 6 p.m. to 11, 6 to 8, 7 to 9. Each of them had like 3 different spreads. Which spread do I choose? Why are they all priced differently? Which one is best? Let me go back and forth and click back and forth between the time frames on the Nadex platform. Well, something here at Apex that we've developed is our spread scanner, okay? And it helps you select the time frames, narrow down the spread, see everything. Here is a quick screenshot of the new scanner that's going to be released here in just the next couple weeks over at Apex. This looks extremely confusing to you, I'm sure, all right? And I'm not going to spend a lot of time on it, but just real quick here, right in the middle is the contracts, okay? 44.95 to 45.05, all the contracts. And what are these? Floor, ceiling, okay? These are closing at 1 p.m. These are closing at 2 p.m. These are closing at 4:15. So remember how I showed you on the platform, we had to go through 6 to 8 and 6 to 11, go back and forth, and which ones were what? They're all right there for you. That's the first thing to realize is these are the floor and ceiling. These are the spreads. And right here it shows you these are the 1 o'clock expirations, 2 o'clock, 4. So you can see every spread available all on one page. You don't have to go back and forth, okay? All right, and then there's all kind of different spreads. All right, now I'm going to throw you off a little bit here. All right, well, we went through and explained the basics of spreads to you. $1 per tick, everybody gets that, right? Now, spreads have different pricing, okay? Spreads can have what's called premium. We're going to talk about premium. You can either collect premium or pay premium, meaning if you buy a spread that is, let me give you an example here. See this spread, 44.90 to 4,500, floor and ceiling. Right now, the indicative is at 44.92. All right. So let's say that I want to, let's say that I want to buy this spread. All right. Remember, offer and bid, just like on Nadex, right? So here's your spread contract. You can sell it for this price or buy it for this price. Okay, again, all this looks so confusing. It's just the same information that's on the Nadex platform. It's just all in one place. So I can sell it for $44.96, but the market's at $44.92. How can I sell it so much higher than the market? Well, because that's where it's priced at. That's called premium. All right, premium is built in. You're already selling it higher than where the market is. So if I think the market's going down and I sell, if the market's at 2,500 and I sell it, I think it's going down. What if I could sell it at 2,520 and get an extra 20 bucks out of it if I'm right and it keeps going down? And we'll get to that. Don't get confused. Okay. Or what if right here I want to sell it? I can sell this one for $44.90, but the market's up at $44.92. So I'm selling lower than where the market is. So the market has to drop from $44.92 down to $44.90 just to kind of get me like even up, it feels like, right? Okay, we're going to bring this all together. Don't get confused. My point is, on the Nadex platform, you got to run all this math yourself. You got to figure out what spread is what, where's the market, where's the spread priced at. The scanner puts it all together for you. Here's the contract. Here's the floor and ceiling. If you want to sell it, you can sell it for this. Okay. And it's got $18 of premium built into it. It's 18 ticks away from where the market is right now. If you want to sell this one, you can sell it for this. It's 15 the other way. Okay. How much time to expiration? It's all on one here. So if I want to sell this one, what's the most I can make? Green is the profit. Red is the risk. So if I'm looking at, okay, well, which one of these spreads have a bigger risk? Wow. If I want to sell this spread, it's $314 risk in a sense. That's the margin you have to put up. And the most I can make is only 86. Why is that? Well, it depends on where you're buying it at. If you've got a floor and a ceiling and it's almost at the ceiling and you buy it, you don't have a lot of profit left in there, right? Because you can only make money up to the ceiling, correct? Okay. JP, I know if you didn't get that, I'm sorry. I'm kind of running through this. I'm going to show you where you can watch a step-by-step video of this that just brings it all together, and you're just like, oh, wow. Like, you'll totally get it. Okay. Another good aspect of this here, this risk-reward ratio, everybody understands that, right? Green is what I can make off this spread, max, or what I could lose off this spread, max. Okay. Now, keep in mind, right here, this says I can lose $70 on this spread. What does that mean? That means that my max from the ceiling, from where I'm selling it to, is 70 pips. So the amount that I got to put up for margin out of my Nadex account is 70 bucks to enter that trade. All right, or this one here, 314 bucks. So I'm going to have to put up that much to get into this spread. And it's going to say that's my max risk. Is that really my max risk? Am I going to let a market go against me by 314 points and not get out of it? No. Do not be. This is the other big misconception about spreads is, oh man, the risk is so much higher. Look at this, 138 and 217. I'd rather just do a $60 binary. Okay. Let it go against you by one tick and lose all 60 bucks. If this thing goes against me by 40, 50 ticks, I'm probably going to be out of it, right? So this is just the amount that I have to put up to get in the trade. It's not an all or nothing okay? If I buy thinking the market's going to go up, but it starts to go down against me, I may have a stop set at 20 ticks below. It takes a lot for a market to go 314 ticks against you, right? You're going to be way out of it by then. But let's look at another scenario here. Let's say that I wanted to buy a spread, okay? Oh, look at this spread. I like this spread because it's real close to the market or whatever. It's going to cost me $334 to get into this one spread. It's going to cost me it's going to cost me $60 to get into this spread. Okay. Well, maybe I want to look at this one that's only 22 and get 3 of them and have the same risk as this. Now, I'm not saying always do that because they might be different floors, different ceilings, but this is just another good way to look at those kind of things of, okay, I can get this one spread, I like it, ooh, but I could get 2 of those. So this one may have to move a little further, but then I'm doing $2 per tick instead of 1. Is that better for me? You know what I mean? And you can piece all this together all on one page, not back and forth all over the Nadex platform. I'll show you where you can get more information on the scanner, watch step-by-step videos that will make it make a lot more sense there. Also on our scanners, it will show you how to mirror the market, meaning let's say you're a futures trader and you're trading futures contract on the Russell, for example, okay? The Russell on Nadex is known as the U.S. Small Cap 2000, okay? A Nadex spread moves $1 a tick. A Russell futures contract moves $10 a tick. So how many Nadex spreads would you need to equal a futures contract? 10, okay? And on our binary scanner or our spread scanner, it actually lays that out for you. It shows you on each of the markets, if you wanted to compare spreads to futures, how many Nadex spreads would you have to get to equal a future? All right. Now, what's the big difference there? Well, the big difference between trading futures and spreads is their defined risk. Because, all right, a futures contract moves $10 a tick. I can go ahead and buy 10 Nadex spreads and equal that out. So it's just like trading futures. But if I'm wrong and it goes against me, I, in a sense, have unlimited risk with my future. My spread, I'm only risking to the floor or ceiling, right? So it's capped risk. And there's no whipsaws. You're not getting stopped out just because it went down to the floor or ceiling, okay? And, you know, some of you may have smaller accounts and margin, and you need to start with spreads and trade 1 spread at a time and 2 spreads and 3 spreads. You don't have the account balance to want to, or the risk tolerance to want to get into trading futures just yet, okay? We've talked about this a little bit, spreads versus binaries, but we're kind of talking about trend trading tonight. So just some quick differences of spreads versus binaries for trend trading. All right, with spreads, you can sometimes have longer to be right, depending on what expiration that you're looking at. I mean, you can get end of day binaries, the daily binaries, but they can move very slow. I mean, an end of day binary, if you've got a long time till the end of the day, the market may have shot up 40 or 50 points, but your binary's only gone up by $15, $20 in value because of those big, wide strikes. As to where your spread, you could have possibly got it to match the market and been up 40 or 50 points, okay? So binaries have big rewards with small moves. Remember we talked about that. A 1 tick difference can mean the difference in winning or losing that binary. You buy a binary for $60, it expires 1 tick in the money, you made 40 off of it. Great. Spread 1 tick, $1. So on small moves, binaries could potentially have a bigger reward on that smaller move, but they don't take advantage of the bigger moves all the time. Remember we talked about that. Binary pops up in your direction, max, potential, but then it's done. At 100 bucks, it caps out. As to run your spread, you might be able to keep going with the market as it's flying and flying, going up $1 per tick. Okay. Now you can use multiple entries and keep getting into more binaries and another binary and another one and follow the market. You could do that, but that's a lot of, tolerance and mentality to be able to watch that and keep up with it. As to where your spread, just keep going. Okay. You got daytime and nighttime spreads on different instruments. Again, we've got Forex, commodities, stock indices. So you've got stuff day or night. Overnight, you've got spreads on everything that's open, and you've got the hourly and every few hour spreads on all your FX pairs that we just talked about there. At night, early evening, you've got the Australian and Japanese, the Asian markets opening up. You've got some movement there. Overnight, you've got the European markets, and they do offer spreads on the European stock indices. The FTSE, the German, the FDAX. And then, of course, your U.S. Open, you've got all the U.S. indices, you've got the FX, and you've got the commodities, oil, gold, silver, copper, corn, soybeans, and so on. Okay, so there's always something to trade with Nadex spreads. You can take advantage of the news coming out, whether it's U.S. news, Asian news, European news overnight. There's always different ways to use the spreads and to trade them directionally. So let's talk a little bit, and we covered this a little bit, about how to select. What spread do I want to go with? Do I want to go with an intraday spread that's expiring in the next hour or two? Do I want to go with a daily spread that's longer term? What's my maximum risk? Is it better to do one big spread or a bunch of little ones, kind of like we talked about? Well, back to our quick screenshot here. Okay, can it will be for now? Yes. Yes. We're not sure if that's going to change, but for now, yes, absolutely. This will show you all the different spreads that are out there. Okay, and it will help you decide which spread you want to pick. Now, what will determine some of that? Let's talk about proximity. Okay, this spread is 44.90 to 45.30. So what is that? Floor and ceiling. Where's the market at right now? 44.92. Okay, so the floor is 44.90. The market's at 44.92. Okay, and the ceiling goes all the way up to 45.30. So if I want to sell it, where can I sell it right now? At 44.98. Well, the market's at 44.92, but I can sell it for 44.98. That's way above where the market is right now. Right. So over here, if I want to buy it, I can buy it for 44.90 or 44.99, which is also way above where the market's at. Okay, that's what's called proximity. Some spreads you will find, the middle spreads especially, are right at where the market is. The market's at 44.92. You can buy it or sell it for right at 44.92. Okay, and when you buy or sell a spread right close to where the market is, that's where your spread moves $1 per tick right away. Like as you see the market going up a tick, you see your profit going up a tick. When you buy or sell spreads that are further away from the market, where the current market is, you won't see that immediate dollar for dollar move. But at expiration, what do you get? If you're buying a spread, wherever you buy it at, and then whatever it expires at, you're getting that difference dollar for dollar. Okay, I know that's probably a little confusing. We're going to talk about it a little bit more. But when you're buying with a further away proximity, you won't always see your P&L number move $1 per tick as the market moves, because you've already bought or sold higher. But it doesn't change what you make at expiration. So if I buy a spread at 2400 and it expires at 2420, what did I get at expiration? 20 bucks. I get the difference of where I bought or sold it from at compared to where the market expired at. Okay, so that is proximity. Basically, proximity means buying or selling above or below the market. All right, so spreads can move slower based on the size of that number. That's what we call out of the money, at the money, or in the money spreads. There's different spreads. They move slower when they get closer to the floor or ceiling. For those of you binary traders, you ever bought a binary for 50 or 60 bucks and then, or like 60 bucks, right? And the market starts moving your direction. And then you see the value go 65, 70, 80, 90, and then it like slows down, right? It'll get to like 93, and then it just stops. It doesn't keep moving fast up to 100, right? Like it might move real quick from 50 or 60 up to 95, but then it kind of slows down. And then at expiration, you get the full 100 bucks, right? Same thing with the spread. The middle kind of 40% moves the fastest, moves the closest one-to-one as you're watching it, all right? And like when you're watching your P&L go up $1 at a time, but when you get up close to that floor or ceiling, you won't see it move like that on your P&L, $1 per tick, per se, but at expiration, you get $1 per tick of where you bought to where you sold. Again, it might be a little confusing, but I'm going to show you where you can kind of get a little better breakdown of this. I'm just kind of going through this with you a little bit, okay? So what is premium? Premium is similar to proximity. It's how far away is it? Do I pay premium or do I lose premium at expiration? You do not lose your premium at expiration. It's all about where you bought or where you sold. Premium is the difference of where you bought or sold compared to where the market is now. I'm going to give you one quick example of that, and then we'll move on. All right. Let's say on this example right here, 45.95 to 45.05. Okay. Let's see here. No, I'm sorry. That is not the example I want to show you. 44.92. Right here, 44.90 to 4,500. So we got floor and ceiling. The market's at 44.92. So let's say that I think the market is going down. All right, just go back to our basics example from earlier of that little 100-point spread. I'm going to sell it thinking the market's going down. Okay. Well, I can only make money down to where? Market's at 44.92. I'm going to sell it saying it's going down. I can only make money down to 44.90, correct? Okay, exactly. So, but there's some volatility in the market. So this particular spread is priced at 44.94. So I can sell it for 44.94. But that's higher than the current market, isn't it? So at the time I enter this trade, this is real key here. At the time I enter this trade, the market's at 44.92. Let's say it goes down to 44.90. But I actually sold it for 44.94. So instead of only making 2.3 points off of it, I could make 4 points off of it. Because what I'm going to get at expiration, let's say the market went all the way down to 44.90 and kept flying down, I'm going to get where I sold, the money I'm going to get is where I sold it compared to the floor. Okay? So when you're selling higher than the market, you have the potential to make a little bit more. Does that make sense? Okay? And premium's built into there because there's volatility in the market. all right? Meaning we think it's going down, but others may think it's going up. So it's priced a little bit different. The most you can make is 40, but risk is 60 on that particular one. No. On this particular one, well, yes, I'm sorry. Yes. On that particular one, technically, Robert, most I can make is 40, but my risk is 60. Well, technically, yes, because if I'm selling it right here at 44.94, the ceiling is 4,500. So it could go all the way up there 6 points. So technically, yes, but doesn't mean I can't get out earlier, right? Doesn't mean that I'm like, okay, my max I can make is 40. So if it goes against me 40, I'm going to get out. That way I keep a 1-to-1 ratio, right? Risking 40 to make 40. Again, that's what we talked about. Like when you see these risk rewards, it's not a binary. It's not all or nothing. It's not you'll either lose this or make this and that's it. It's just the total spread, floor to ceiling. That's the differences of where the market's at. You can get out of it anytime. Okay? So that is just a quick explanation of premium, where you can sometimes buy below the market or sell above the market and have a little bit of built-in premium. Okay? And again, I'm going to show you where you can get some more information on that. But why is that helpful? Why would I want to look at something, a spread with some premium in it that might let me make a little bit more? Well, because what if I think the market's going down? I could either sell it at the current market of 44.92, or I could sell it for even higher. That means I make more. Well, let's say that I'm a part-time trader. I only have a little bit of time left, and I need to be out by 2 o'clock. Well, I can either buy in, or I can sell right at the market and literally get dollar per tick, or I can do a little higher in the market and not only get that dollar per tick down, but also that difference in premium. I can make a little more. Okay, so there's several different little strategies there, but we're talking about directional trading. And if I'm saying, say I've got a shorter time to expiration and I want to get something with a little extra premium in there, technically you don't, Mark, because think about it this way. Mark says, hey, you pay more to get in it, right? Not necessarily, because think about this. If I sold this spread, if the market's at 44.92, it could go all the way up to 4,500, right? That's my max loss or max risk, right? Mark, you follow me there? From 44.92 up to 4,500. So 4,500 would be where I would no longer lose money. But I'm selling at 44.94. And again, my ceiling is still here. So I'm actually sold closer to the ceiling. So I actually have a little bit less risk. Does that make sense? Because I'm getting in it higher. The lower I get in this spread, the more there is going back to the ceiling. That makes sense? I'm getting in higher. So what's the downside? The downside is psychological, because when you're getting something with a positive or negative premium, you won't see your P&L go dollar for dollar with the market move. It kind of takes a little longer for it to start going dollar to dollar as they get closer. But in the end, you still get the difference of where you bought or sold compared to where it expired from. It's a psychological thing that you got to learn to take out of your head. Okay? So let's see here. Veronica, how much money do you lose if you bought an out of the money and going up and the market did not hit the price at expiration? How much money do you lose if you bought out of the money and going up in the market? It all depends on where you bought, Veronica. Okay, so if you bought an out of the money, let's take a look at that. An out of the money buy, let's see here, 44.92. to, okay, I think, for example, maybe this top one here is 44.95 to 45.05. Okay, so the floor is 44.95. The market's at 44.92. So the market's below this floor. So what does that mean? It means the market would have to move up from 44.92 up to 44.95 and then start moving for us to start making money. That makes sense? Like, we're not inside our floor and ceiling range. The market is outside of our floor or ceiling. So I can buy it for 44.97. So right here it's negative 22. It's 22 ticks out of the money. So if I buy an out of the money spread like that and the market starts moving a tick, am I going to see $1 per tick change in my P&L column? No, because it's got to get, the market's got to come back together there. Does that make any sense at all? Where the market is below our floor and ceiling, okay? So that's why people say, oh, I bought this spread and I don't see it moving and the market's moving. It's because you're outside of the floor and ceiling and the market's got to get back up there for it to get inside of that floor and ceiling to start making money. Oh, well, then why in the world would I ever want to buy that spread then, right? That's your next question in everybody's head. Well, why would I want to do that? Why would I want to buy that spread that's outside and the market has to move some for me to then start making money? Why would I ever do that? Right here. Because what's your risk? Your risk is only 22 bucks. It's out of the money spread is really cheap. Your risk is only 22 bucks. Compared to, look at some of these spreads that are right there close at the money, 200, 400. And again, that's not risk. That's not realistic risk. That's how much money you got to put up. So if I think there's going to be a big move in the market, I'm talking like big move. Well, I could buy this spread right here and tie up 219 bucks. And as the market's moving tick for tick, I'll see it on my P&L like, ooh, there's another dollar. Ooh, there's another dollar. It'll make me feel warm and fuzzy, right? And let's say the market moves 100 ticks. Sweet, I made 100 bucks. I'm liking that, right? And what kind of money did I have to tie up? 219 bucks. How many of these spreads could I have got for tying up the same amount? 10 of them. So let's say I had 10 of these and the market moved 100 points. Well, I'm not making any money the first 22 points it moved, right? Because because the distance of the market. But after that, those other 80 points, I'm making on 10 spreads. Okay? So that's just an example. You don't always, everybody's going, oh, I love that. That's awesome. Well, I'm not saying you always do that because that strategy there, again, the question is, why would I want an out of the money spread? Why would I want to make the market move before I can start making money? Well, it's because you can get them so cheap sometimes, and you can get multiples of them for the same price you can get one spread. But that's only a viable strategy if there's a big expected move in the market. Does everybody follow me on that part? You might have got confused on some of the other, but does that make sense? Okay, it's just like a binary. Why are you going to buy an out of the money binary for 15 bucks? You've got to have movement, right? So if there's a lot of expected move required or expected, that's where out of the money spreads are lower risk, require less margin to get into, and you might be able to get more of them. Or if you're just trying to follow the market dollar per tick and you expect the market to go up, but you're not sure how far up, you just want to stay in it dollar a tick, then you're going to try to get closer to right at the money, no premium spreads. Okay? So again, I know in the beginning you're like, spreads are easy, I love this. This last section or two, seems a lot more complex. These are the two places, proximity and premium, that slip everybody up on spreads. And I'm going to direct you to a step-by-step video explanation of them. It'll take us a while to go through it all here, and it'll all make perfect sense to you. Okay, so we're talking about directional trading with spreads. So that's why we kind of went through some of this. We know spreads are dollar per tick. We know there are out of the money spreads. There are in the money spreads. There are longer term expiration. There's all kind of different spreads that we can do for these different strategies. Okay. Erica, would you suggest for first starters to pick a few spreads with the smallest risk once out of the demo account? Not necessarily. I would not always say to go with the ones with the smaller risk, because the ones with the smaller risk may also require, depending on the spread, may also require a bigger move. You might find that going with ones that have a little bit bigger risk per se, and again, that risk amount is just the difference to the floor or ceiling. It's just the amount that you have to put up out of your Nadex account to enter that trade. Doesn't mean it's actual risk. It's not all or nothing. If something shows a $200, or a $166 risk and a $134 possible reward, it's not you're going to get one or the other. It's about where did the market move. And if the market's moving against you and you're down 20 ticks, you might decide to get out. So you really only lost 20 bucks. You're like, hey, I think the market's going up. No, it actually went down. Man, it went down against me 20 ticks. I'm going to get out. You lost 20 bucks, not 166. You just had to put up 166 because that was the amount it required to get into the trade, because where the market is compared to the floor was 166 ticks away. So that's the max you could lose all the way to the floor. So that's the amount they're going to make you put up out of your account to get in the trade. But you can get out of it any time. So these ones that feel like higher risk, because it says risk right there, doesn't actually mean that's what you're going to risk. Okay? You could look at another way of, well, I'm going to pay 166. I'm going to have to put up 166 to get in this. But if it goes against me 20 ticks, I'm going to get out. It's not any different than this. You're risking 22, and it has to move up for you to even start making anything. You're still risking 22. Okay, so you still have risk on both sides, and that's where you really got to understand the differences here. And it's all about your strategy, because this is a $22 risk. Ooh, I love that. This is 166. I don't like that. This one here, all you have to say is, if it goes against me 22 ticks, I'm going to get out. It's the same risk. Just because these numbers are higher doesn't mean the actual risk is higher. It's just more you've got to put up to get in the trade. Does that make any sense? Okay, from the risk factor, you're not really looking at these as far as the risk factor. You're looking at it more as a account balance factor. If I want to have 10 spreads, I might not be able to get 10 of these. I may not have $2,200 in my account, but I might get 10 of these, and I'm expecting a big move. Okay, like if there's not a big expected move in the market, if the market, okay, put it this way, if the market doesn't move, we think it's going to go up, and we're wrong. It doesn't move. It's not that it goes against us, it doesn't move. And we got into this one, and the market did not move. What will we lose here? We would lose all this. We would lose all 22. Because remember, because it's negative, like the market has to move to get back within this range so we can start making money. If it doesn't, we lose that 22. If I get into this one and the market doesn't move, what do I lose? Nothing. No, we don't lose 166 because the market didn't move. We got into this thinking the market was going to go up, but it didn't. See, because this one is inside of the market's inside of the floor and ceiling. Okay, so we get into a spread, we make $1 if it goes up, lose $1 if it goes down, doesn't do nothing. We didn't make or lose anything. We're even. Okay, so does that make sense there? So there's a couple things you got to look at there. It's not just about, ooh, small risk. Well, that's small risk, but the market's got to move. Here, you're putting up more to get in the trade, but if the market's flat and doesn't do anything, you actually lose more over here than you would here, because you wouldn't lose anything here. It just didn't move for you or against you. Here it has to move. Okay, so let's you know, like I said, there's all kind of different spreads to choose from. You may have your own strategy, your own system, your own trending charting system, whatever it is that you may use. I'm going to just briefly, just real quick, show you a couple of the different ones that we use over at Apex. Just 2 or 3 different ones that we use for trending strategies that we use for spreads. One of our favorite ones that has been around forever, kind of our pilot system and strategy here, is what's called our Elite MVP. I won't bore you with exactly how it's all calculated, but it's called our Apex pattern. We got A, P, E, and X. Apex. Basically, A is a high, P is potential, E is entry. So we get a green E, that's a long entry to buy. And when this line right here, we call our MVP line, when our MVP line is green and we get a green E, 3 ticks above that, we buy. And see what happens here. If we had popped in right here on a spread at 2034 area, followed it all the way up, kept going up, kept going up, going up, way up here to 2057. Okay, and that is actually, these are what is it? This is ES. That's a good amount of ticks there on ES. Here's an example of oil. See right here where we've got a red MVP line, then it turns green. Then we don't enter on the first apex. We make sure it flips. Then we get this next apex. Boom. Could hop in there, trade oil from $50.70 all the way up to, we would have exited right here when it flipped to 51.11. So 30, 41 ticks there. It's an idea of directional trading. That's one of the things one of our systems there, our Apex systems. Pretty simple. You're looking for a green E, lining up with green, you go long. A red E, lining up with red, you go short. Not too complicated, right? Obviously, there's a lot of programming built in behind this, calculating the A's and the P's. It's basically higher highs and lower lows and so on. And red, you sell. Green and green, you buy. It's one of our favorite systems there to do Nadex spreads with. One other system we have is the trend catcher system, which the Apex system here, the Apex Elite system, is more of a longer term trend kind of system, an overall trend. It's like you can see here, even though the market went up, or let's actually look at a couple examples here. See, like this one here, the market's going down and down and down. But see, like there was some up movement here and some up movement here. We have some traders that like to get the quick, immediate moves of the market and scalp, you know, kind of do some scalping even of, hey, I want to catch, you know, what is the immediate trend of the market, not the overall trend of the market. And that's where the trend catcher system comes in. It can catch the big trends as well, but it's designed to give you the immediate direction, immediate trend of the market. It's very simple. It's these arrows. We've got a cyan colored arrow as like a heads up of, hey, you may start to get a you know, indication to go long here. So your heads up, you're waiting, boom, a green arrow up with green bars is what? Buy, boom, there you go. And see, then it's like sell, buy, sell. Now, I'm just showing you that because that's very simple. Red arrow up or red arrow down is sell, Green arrow up is buy. We also have our MVP line here that some of our traders wait for it to line up as well. That way you don't get caught in these little ones. Right here, we're going down, boom. MVP line flips red as well. Going down, down, down. Oh, that says to go up, but nope, MVP is still short. We follow this trade all the way down to here. Same here. Follow this one down to here. Then we go long. So it's more of an immediate trend, immediate market trend catcher. Okay, that's why it's called trend catcher. So more the immediate trend. Again, not saying one system is better than the other. It's personal preference. Do you like our longer term trading? Maybe if you're trading these, Apex Elite systems here, longer term, maybe you want a longer term, wider spread that gives you a more space to a floor or ceiling. Okay, if you prefer a quicker trend, maybe you still want an end of day, or maybe you want a smaller 2-hour spread. Maybe you're a part-time trader and you need something that's showing you more of a quick initial trend of the market, and you want to do, this may seem like, oh, well, those aren't very big trends. Well, that one may only be 4 or 5 points there. When I say 4 or 5 points, that's actually, it's 4 ticks per point, so that's really $16 to $20. And maybe I'm doing 5 spreads and 5 spreads and 5 spreads, okay? One of our other systems that is kind of a longer term, or can be kind of in between the two, is called our Profit Hunter system. This is a kind of newer system we've come out with that's very, very easy to learn. And basically, a nutshell, and these are special bars. These are not time-based bars. These are tick bars. We call it diagnostic tick bars. They kind of take time out of the equation. But pretty simple is if basically the price comes down below the yellow directional line and our bars turn red, then we sell. The price comes up above the yellow directional line and turns green, we buy. And it just keeps going up, 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 up. There's a little more to this one. There's some second entries and reversals and some verifications, but some very basic systems, okay? Some very, very basic systems there. For example, here, one of the other, kind of the second step to this is price went below the yellow line and it's red, so we sell. But then look, it popped back up, but then came back down. So it popped over this blue line, didn't keep breaking that yellow line, so guess what? We didn't buy. We're glad we didn't, right? Because we needed to break and confirm and then break in 3 ticks and go pop back up. That means it reversed. Now it's coming back down and breaking this blue line again, and our bars turn red again. Boom, we get a few more ticks out of it. So there's some entries, there's some second entries, there's some confirmations that keep you out of some of those fake outs. You know what I mean? So yes, and that would have been a short, Rob, exactly. Let's see here, Phyllis on, that would be Elite, okay? So that's just a quick couple examples there of some ways that we use them. Let me show you where we can get you some more information here on a few of these things, and I will try to, I think we've got most of the questions as we went along here. If you have another question, like I said, I'm gonna show you where you can get some more information about some of those charts and indicators I just showed you, where you can watch the step-by-step video of the ins and outs of Nadex spreads. So I know that everybody was following me along there and was loving it and loving spreads. And then when I got to proximity and premium, you're like, oh, wait a minute, I'm confused. Some of you got it, some of you are confused. I'm going to show you exactly where you can go step by step, and it'll all make crystal clear, perfect sense to you, okay? Again, hop on over to our website, apexinvesting.com. Get a free username and password right here. Questions, trading questions forum. And we're going to go down to the spread section. Well, I'm going to show you a couple of different sections, all right, because we covered a lot of ground tonight really quick. It would take us hours and hours to dive into each and every little aspect that we covered, but I'm going to show you where you can get that info because I don't want to leave you hanging. I'm giving you a kind of big overview here, And I know for a few of you, some light bulbs went off like, oh, maybe I do like spreads. Oh, you opened my eyes to, I can do multiple spreads and lower. Okay. So that's what we wanted to do there, was more have a few light bulbs go off and kind of put some of these pieces together for you. Now I want to show you where you can dig in and make it happen. Okay. So trading questions forum. On our forum, the first thing you can look at is right here, S9 scanners. Remember we talked about our scanner a little bit? Some of y'all were a little confused by it, and then some of y'all are like, oh, that is great. Everything on one page. I don't have to go back and forth between the Nadex website. Everything's on one page. Shows me the different spreads, shows me the expiration times, shows me clear as day my profit or my potential profit, potential risk, shows me how far away it is in proximity. Everything's all on one page for you. So you go right here into Apex Scanners, and there's information there about how to use the scanners. Okay, right down here, watch webinars. This webinar that we're doing tonight, this recording will be up here under newest webinars. If you want to watch it again, I'll try to get up there here in the next hour or two. Otherwise, go right here, Nadex Spread Webinars, and I believe it's the second one down, is titled The Ins and Outs of Nadex Spreads, right there. Okay. Basically what this is detailed walkthrough of what I went through with you tonight. All right. This first video, some live spread trades that Daryl did. This first section here is spread basics overview. This is what I covered with you earlier. As you see, it's the same PowerPoint showing you the ceiling and floor. What you probably really want to go back and watch are these risk and reward to really understand that, like we talked about it. And then these last two. What is proximity? What is premium? These videos are completely, totally dedicated to making sure you understand what does it mean when the price is not right at the floor, right at the ceiling. What does it mean when the price is not right in the middle? Why are spreads priced differently? And how can I take advantage of that? Why would I want to choose one spread over the other? What are some different times or ways I would want to do that? And proximity and premium right there. If you go back through and watch those and take what you've kind of taken from this tonight, spreads are going to come together for you and you're going to love them. Okay. Now, again, most of what we're talking about here tonight is directional trading. Somebody had a question earlier on in the webinar, and I told them I would get that answer for them of how do we take advantage of spreads for news trades? Well, remember we talked a little bit about premium. Remember where we could sell a spread higher than the market if we thought it was going to go down, or we could buy a spread below the market if we thought it was going to go up, and there's premium built in to where we can make a little extra there. Well, there's another strategy which we're not going to jump into tonight. So we'll call an iron condor with Nadex spreads, and what that is basically two different spreads. We're buying one and we're selling one, both with premium in it, hoping for the market to expire kind of in the middle. That way we make the premium on both sides. We're not sure which, we don't know which way. Yes, at the same time, we don't know which way the market's going to go. So we're going to buy one and sell one, hope it expires in the middle and make money on both sides. That's called an iron condor. Okay. You want to learn about that? Go right here to news. This is super cool. All right. You guys are going to love this. Right here, news trading plan. Guys, this is free. If you go to Apex Investing, someone's asking is it .net or .com, doesn't matter. I'll take it to the same place. Go to apexinvesting.com, sign up, get a free username and password. Go to news trading calendar, and check this out. This calendar, this week, for example, this shows you, now this is not every single news event going on in the world, obviously, okay? Like last week, there was a bunch of news. Some weeks are, heavier than others. But these are the main news events that we think you need to be aware of that have a potential or historical, have a history of having an effect on the market. And we'll tell you each day, what time, what is that news. Some of them just say, hey, be aware, which is like, hey, this news event's coming out, be aware. Might be a little spike in the market. Like if you're trading binaries, they're down to one tick, 1/10 of a tick difference in winning. You might want to be out before this news spikes you up or down. But then some of them, look, iron condors, straddle. We tell you the news. We tell you exactly what trade to do on it. This one here, for example, last Monday, pound dollar, iron condor. All right, you click it. It says, okay, there's various reports coming out on the pound. They're being released at 4:30 a.m. on Tuesday. We're looking to find an iron condor on the pound dollar, entering as early as 11 p.m., that's Eastern time, with an expiration of 7 a.m. for a minimum profit of $30 per condor. So we tell you, here's the news, here's the trade, here's the time, here's what we recommend. That's all free to you. You can know ahead of time what you're going to do. Oh, okay, John, well, that sounds great, but what the heck is an iron condor? Scroll down. Scroll down below the news plan. Bam, video. How to trade news events. How to trade oil inventory report. Next one. Step-by-step iron condors on Nadex spreads. We go through here and show you exactly how to do an iron condor. Exactly what you're looking for. Exactly how to find them. We have a calculator you can use how to figure them out as well. And that's free. That's a free news plan, a free trading plan, free strategy, free how to find it. Okay? And yes, that's what an iron condor is. It's basically buying and selling a spread at the same time. They're different spreads, but you're buying and selling. Because I'm just going to show you this real quick and then cut you off here. Okay, remember we talked about premium. If I'm going to buy, okay, what does this spread down here have? $66 in premium already built in because I'm buying below the market. So if the market did not move at all, and I'm not making a dollar per tick in movement, and the market expires and doesn't move at all, I'm still going to make 66 bucks because I bought lower than the market. So there's premium in there. So the market doesn't have to move, right? Follow me? What about this one if I sold it? There's $60 of premium in there, right? So let's just say there's a news event coming out, and I think the market will have some movement, but not a lot of movement, and I think the market's going to just kind of move up a little, move down a little, and kind of end up about where it is now. Well, as long as the market kind of expires in the middle or somewhere in the middle, or even if it's not right in the middle and it's kind of went to one side, I've got $66 potential I can make over here, and I've got 63 potential I can make over here. If it expires right in the middle, I can make 120 bucks. What if it goes one way, 60 points? Well, then I don't make anything on this side, and I still make it on this side. You know what I mean? So that's basically an iron condor. Okay. Daryl was asking, what is the difference between an iron condor and a butterfly? They're essentially the same thing. Okay. You're buying and selling and wanting it to expire in the middle. It's just butterflies are done on binaries. Condors are done on spreads. Okay. So take a look at those videos as well. Just another kind of freebie there that you definitely want to take advantage of on the Apex website. Free news calendars and some good information there. So let me just double check a couple of questions here. Somebody was okay earlier. All right, let's look at the euro dollar. let me open this up here. Okay. These spreads right here, for example, 6 p.m. to 11 p.m. Okay. Let's say that I want to buy a spread. I think the market's going to go up. So right now, the market is at 1047. Or, yeah, 1047. This spread, the floor is 935, ceiling's 1185. So I want to buy one spread. Okay, so I buy this spread, and it's right there in my open positions. Okay, and so as you see, I bought it. That's why it says +1. If I had sold it, it'd say -1. All right, and I can watch my P&L here, and if the market goes up, I make a dollar tip, right? But I gotta go. Whatever. Question earlier, remember? How do I get out early? How do I put a take profit order in? Okay, so somebody's asking, hey, can you show the example of how to do a take profit order? Shanta, you're asking about Nadex Pro. We don't use Nadex Pro for this. Okay, I'm just showing you on the regular Nadex site here. So where did I buy this? I bought it at 1050. Well, let's say I want to make 30 bucks. Where would I need to get out? 1080, correct? So if I bought it at 1050 and I want to go for a $30 profit, then I need to get out at 1080. So what do? I just click. This is my open order. It's active. It's open. It's in there. I click it. It'll pop up a ticket that automatically says sell. See? Because this was a buy order that I already had in there. So if I click it, Nadex platform knows that I'm wanting to get out of it, and I have to sell it to get out of it, right? And so it automatically comes up as a sell order, and it automatically fills in the price of the current bid, what I can currently sell it for. Okay? So, but I don't want to sell it for that. I want to sell it for when it gets to 1085. So I place that order. Is the market there yet? No, the market is not there yet. Okay, so this order is still open right here. Up here under working orders, there's a working order to sell at 1085. Okay, so that's how I have a take profit order. So I bought it for 1050. I've got that order in there for 1085. Or for 1080, if the market gets up there, it'll execute that order for me. Okay. Let's see here. Let's check out. Let me just give me a second here to catch up on a couple questions. Let's see. Yeah, Sean, I was just showing here on the regular platform. We use the scanner on the regular platform. I don't really use Nadex Pro. I've seen most of the videos on spreads, but I was wondering if you could direct me to a video that talks about managing that condor once it starts moving. Actually, I'm not going to find it. Rahesh, did you watch those videos there on the news page as far as managing the iron condors? Have you checked those out there? Let's see here. Phyllis, thank you so much. Sounds great, Phyllis. Let us know. Let us know if there's anything we can help you with or any questions. Just hit us up over on the Apex site on the instant message chat or in the help desk. You can send us a ticket or in the forum. So if you have any questions on like you're saying here, the butterflies or the strangles or trying out some iron condors with the spreads or directional trading, anything there, just let us know. See here, Shot, for now, yes, the new scanners are going to be available to everyone. Yes. Iron condor are the same as a straddle. No. Iron condor is the same as a butterfly. A straddle is where you are buying a upper spread at the floor, selling a lower spread at the ceiling as close as you can. A lot of times, tests for when we do straddles, it's because we're expecting, let's say, a news event to come out, and we think there's going to be a big move in the market, but we don't know which way it's going to go. You know, we're expecting like a 60 tick move in the market, for example. So, but we're not sure which way. So we're going to buy one spread close to the floor. That way we can take advantage of it in case it goes up, or not a lot of risk there. So we're buying close to the floor. And we're going to sell a lower spread close to the ceiling. So we've got risk on each side. You know, I may have, depending on how close I can buy to the floor or ceiling, I may have $10 or $15 risk on each side. You know, so I'm risking 30 bucks, hoping to make 60 on one side because I'm expecting a big move. I just don't know which way it's going to move, but I expect a big move. So I'm getting a spread to go both ways. That's a straddle. The iron condors are the opposite. Kind of, I'm selling the top and buying the bottom, and I'm not expecting a big move. I'm expecting to stay in the middle and just expire kind of as close to the middle as it can, so that I make the premium on both sides. Where it's not where I'm expecting a directional big move one way or the other. It's where I'm not expecting much of a move at all. So I'm trying to collect premium off both sides. So it's a little bit different. It is a buying and a selling. So in that sense, they seem the same, but they're in a kind of really exact opposites in the reasoning why you'd want to do them. Does that make sense? Okay. Phyllis, if you sold, why would you then buy? Well, if I sold a contract, the only way for me to get out of it is to buy it back. Or if I buy a contract, the way to get out of it is to sell it. Don't let that confuse you with, you said, why would you buy the put? Don't think of it as a put. Just think of it simply as if you sold it, to get out of it, you got to buy it back. If you bought it, to get out of it, you got to sell it. Okay? And just like anything else, you want to what? Buy lower than where you sell. Right? Or sell, yeah. Sell higher, buy low, sell high. Okay? So whether you're short or long, it's the opposite there. Is straddle for spreads and strangle for binaries? That is correct, Rob. Yes. Yes. Let's see here. Iron condors. Is it advisable to do one with spreads expiring closer to the news event? Let's say 30 minutes or 1 hour or 4 hours. It all depends on the news event, shot, and that's why we normally list them there on that news trade plan, saying what time we are looking to get in and what kind of expiration we're looking for. It all depends on the news event there. Okay, so okay guys, I think I have all the questions there for you taken care of. I showed you where to hop on the Apex site and get the information, those more detailed webinars step by step, the ins and outs of Nadex spreads. So I will try to get this webinar posted here in the next little bit. You can look for it under most recent webinars. The easiest place to find it, easiest thing to do, hop over to facebook.com/apexinvesting. This will hop on there and follow us, like us on there. We post a lot of good stuff on here, good trades, new trading systems, important videos, a lot of events as far as webinars that you want to be aware of. For example, this one we're on here, you see the event right in front of us. Once I get the webinar uploaded, a new event will be created that is the recording of this webinar. So the easiest way is, yeah, you can hop on our site and check out newest webinars. Did John post it? Is it there yet? Or just be on Facebook and get a notification of the event as soon as I upload it. That way you know as soon as it's up there. So again, facebook.com/Apex Investing. Hop on there and like us, and I'll get this up for you. Let us know over on the Apex side if there's anything we can do for you, any questions, and we'll be happy to answer those for you. Otherwise, join us every Monday night at 7 p.m. Eastern Time. We do these webinars for Nadex every Monday, and we kind of mix it up. Some weeks we do some binary stuff, some we do some spread stuff, we do some system or strategy, news trades, nighttime trading, part-time trade. We try to mix it all up and keep it interesting. Okay, so all right, guys, I appreciate it. Thank you for joining us tonight. Have a great evening. Craig, thank you. Thank you for all the good questions. I hope this helped everybody with understanding a little more about spreads and how to use them. So did it help? Did it clarify some things there? Make some light bulbs go off? Good. Perfect. 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 All right. Well, watch this video again if you need to, and hop into that other one, ins and outs of spreads. And we will see you on the other side and see you over on the Apex website. Everybody have a great evening and a good rest of your week. All right, great. Thank you, guys. Good night.